So I'm just going to introduce the speakers for today. The first speaker is Vince Vitiello. Vince is the president of New America Marketing. Vince has ran MetLife on a national basis and started their Asian marketing group. He later became the chief marketing officer with Allianz and then National Life Group. Vince has always had a great passion for the Asian market. And with that, Vince.
Thank you, Jason. I do appreciate the kind words. I just want to make one comment about Jason. Jason is probably the best young superstar in the insurance business, really knows the market, is very passionate, very aggressive, and I think he could help general agents and agencies grow their business as well, working closely with me. If you remember on the first slide, we actually had a couple of buildings on that first slide. They were actually the MetLife Tower. And I do recall when a lot of us worked together at MetLife, we had strength. We had strength because we were focused on the Asian market. Probably 50% of the production for MetLife was coming from the Asian market. And so we were able to get sales collateral, we were able to get trips, we were able to get a lot of very good things from the leadership of the company. And since we've all left MetLife, we've all gone into different directions, and I think we've lost some of our strength. So I am assisting Jason in rebuilding what we used to have, and our first focus is going to be in the New York and New Jersey area. Obviously, if you're not Asian, we still would love the business. Our main focus, however, will be the Asian market right here in New York and New Jersey. Next, Jason. So in our Brokerage national marketing organization, we have very competitive compensation specifically for the general agents. Agents and agencies maintain their independence. We have training. We have great marketing support. We actually have a team of marketing support. We will have our own conference. There is potential equity where larger producers, larger general agents will have an equity stake in our agency. Our focus is the multicultural markets. And lastly, we are in the process of developing in-language sales collateral, first focused on the Chinese market and then the other markets, and I'll show you examples of that right now. So we have partnered with a company called Security Mutual Life. They are not our only carrier, but they are our main whole life carrier. They are a New York company, been in business 133 years. And to me, they represent what MetLife used to be, a mutual company focused on the agents, focused on policyholders. By the way, I said they've been around 133 years. They've never had translated material in Chinese. So literally within a few weeks, we got them to translate their term insurance brochure, which you see there is a sample. And secondly, we got them to translate their foreign national material, and they will be now translating their whole life material as well as company history. And so all of these translated materials we got done because the company really is focused on us and building the Asian market. And lastly, they want to build it to where we become their main distribution point. So we're very pleased to partner with them and very pleased to have sales collateral. That, by the way, the sales collateral will also have our name on it, Strength. Next, Jason.
So this is just an overview of the agenda that we'll be going over today. So the first thing we'll talk about is the very one question you need to ask all your clients, and essentially is, do you have the old insurance or the new insurance? And Vince will kind of go over what that means and how it kind of relates to more about the show. Number two, of course, we're going to talk about a little about product and how it has a focus on that idea. Number three, some case studies to kind of see it in place. And lastly, number four, we'll kind of talk about the next step where we can go from there.
Thank you, Jason. So I see a couple of my old friends from MetLife on the phone. I see Sam, I see James, I know a number of other folks. So I'm going to give a compliment to my old friend Seymour Schreiber, who you guys might remember. And Seymour was a big veteran in the business. And when he started to sell and when I started to sell, we basically sold whole life, which was death insurance. And so he came up with a great slogan, and the great slogan to ask a prospect or a client, do you have the old insurance or the new insurance? The old insurance is death benefit with cash value. The new insurance has the living benefits. And I want to share some quick statistics that you could share with a client that the client will never know the answer to, but it points to the issue of why they should have the living benefits on the new insurance. So the first question is, what percentage of people die suddenly? And if you ask most people, they don't get the answer right. By the way, the answer is 10%. So the next question is easy. You could ask a client, then what percentage don't die suddenly? Well, it's 90%. So 90% of us on this call will not die suddenly. We will die of a terminal illness. So go to the next line, and it says, when diagnosed with a terminal illness, on the average, how long does this person live? And the answer is 2.5 years. So a insured who was a client or a prospect that was very, very selfish and not wanting to insure them, all of a sudden that $1 million policy in the last 2 or 3 or 4 years of their life, they could actually access a very large percentage of the death benefit. And most people, even though all of us have been in the business for the last 10 years, know about this, it's the greatest secret in our business is the living benefits. And so you don't have to die to access the death benefit. To me, it's the best selling point. So the question always to ask a client or a prospect or someone you play golf with or someone you ride the train with is, do you have the old insurance or the new insurance? And it opens up this discussion. Jason?
Yeah. So one of the questions that we'll be focusing today is this question right here, is what is the average length of long-term care needed? So again, when you ask that question, not a lot of people know. So the answer is 3 years. And the average care needed by women, it's 3.7 years. And the average care needed by men is 2.2 years. This is a topic that Strength specializes in. It is a topic that's near and dear to my heart. I really believe that everyone should have something of this variation, and I'll kind of go over it. So next slide. We also have it in language as well. So for any brokers here that are Chinese, you can take a quick snapshot. Unfortunately, I am a ABC. It's been vetted that it is correct, but unfortunately I can't verify that, but we have that in Chinese as well. So the title of the slide is very simple. It will never happen to me. And we're all about statistics. So I'm going to go over, again, a bunch of statistics that you might want to review with your clients to make them understand why this specific topic is so important. So 137.1 million of Americans have faced financial hardship this year due to medical costs. Heart disease is the #1 cause of death in the US. 6 in 10 Americans are living with at least one chronic disease. 8 in 10 survive their first stroke, leading to 6 months of long-term care. 6 in 10 of LTC is provided by family members. Of that, 5 in 10 family members try to balance both a full-time and part-time job. And lastly, 3 in 10 had to reduce their work hours or completely quit their job. So when you look at the, let's say the Asian market, which I'm most familiar with, what's kind of interesting, my father's on the call as well, so he can verify this. So I know that we are kind of raised to really take care of our elders. So I know that when my grandparents were getting to the age where they couldn't really take care of themselves, my parents immediately kicked me and my brother out of our room upstairs and moved us into the unfinished basement so that we can take care of our grandparents. And this is something that's actually very, very usual, I believe, in the multicultural market. So it's very important, as you see from statistics, that if there's nothing in place, sometimes a hardship may be transferred to our loved ones, which at the end of the day, it's kind of difficult, and if possible, we don't want that to happen. So obviously there are some people or some community or culture may not follow the same ordeals. So the next slide we'll kind of talk about is if you don't have a family member to take care of you, what do those numbers look like?
Jason,
So,
Jason, can I ask a question while everyone is
sure.
on the phone? Do you plan to take care of your father when he gets ill?
Of course. Or my daughter Taylor will take care of him. One or the other.
Just ask
We'll take care of
questions,
the guy.
just making sure.
So my dad has it on record because we're recording this as well. But so right here, this slide is in the event that whether it's a situation that you can't take care of your family and you must put them in either some kind of a service or facility, what does that actual cost look like? So these numbers are generated from Genworth. There's this great website they have that kind of shows you all the costs of various services around the country. So that's kind of where I got this information from. So we're really focusing on the New York and New Jersey area. So really, when it comes to these facilities, there's basically three kinds. There's on the top, the community and assisted living. On the bottom left are in-home care. And on the bottom right is nursing home facilities. So as an example, if you're in a situation where you have to drop off your loved one in adult daycare healthcare, again, that's something that's on merely on a day basis. It's not an all-day thing. It's really only about $1,800 a month. If you are looking at the bottom left-hand corner, and again, same scenario, you have someone that does not require 24-hour care, and you're okay with having them stop by for 5 to 8 hours a day, you're running about $4,700 a month for in-home care. Now, if you are in a situation or you know someone in a situation, a loved one situation that requires 24/7 hour care, while we all probably know that nursing homes aren't the best place to go, unfortunately, that may be one of your only options. If you see again on the bottom right-hand corner, for a private room, the average cost in New York and New Jersey is $1,300, $13,000 a month, which is quite significant. I'm sure it's a lot of people who are either renting or paying the mortgage. If you look at these numbers, it's high. To almost kind of shock you guys even more, I kind of ran some numbers because we see what it looks like when it's monthly, but what does it actually look like? So the next slide, I have a very hypothetical. I call it math because I ran the numbers for everybody. So let's assume that we have an actual client who really had the foresight to save. And he says, okay, I'm putting $1 million away so that in the event if I need help, whether it's healthcare, whatever, I can use that money to pay for it. So assuming a client has $1 million in savings. So let's say he's trying to go with the adult healthcare. You see the math right in front of you. 842 times 12 is 22,000. Divide that by the $1 million. So you can last for about 45 years, which isn't too bad. For in-home care, same thing. 4767 times 12, you get 57. Divide that by $1 million, and you have 17 years. Again, shorter, but still doable. And this is the one that is the most shocker, and now you can see into perspective is nursing homes. Again, we're taking 13,429 times 12. You have 161,148 annually. Divide that by $1 million, and really, it only will last for 6.2 years. So the number one thing that this slide will really teach you is, again, this is assuming just for services. This doesn't talk about anything else that may cost you as you go through retirement or whenever this happens to you. The number one lesson that this one slide should teach everyone is to be nice to your kids. Because if you don't have a family relationship, these are the costs you're really looking into. And hopefully, for people that are just listening, I hope I shocked you a little bit, because I want you all to kind of take a look at your own self, right? Your finances. And I'm hoping that everyone here stays safe and healthy. But in the event that something happens, something unpredictable, it puts you into a situation where you may need long-term care. You're looking at your bank account, you're looking at your assets. How much do you really have saved, and how long can you last? And I think that's why, for me, I'm so passionate about this. Me personally, again, I know I've seen situations where families with some form of long-term care how they lived on, and I've seen situations where then without long-term care and how they lived, and it's literally like night and day. So I try to educate as many people as I can of why this is such an important thing. So
Right.
obviously,
Jason, I could just jump in, and you make a really good point. For those folks that are on the call, we're going to talk about a couple of illustrations in a couple of minutes. But I think too often in a sales presentation, we jump to an illustration, but we don't communicate to the client that we're a source of knowledge. So the reason why we're sharing these statistics with you is you become knowledgeable for your client, and you've created a problem now. And now we want to try to solve the problem. But I think too often, I think the best producers come in and create the problem, solve the problem, and the product is the third thing that we talk about. It's not the first thing. So I think what Jason and I, when we're rehearsing this, is say, how can the producer become a center of knowledge where the client looks at them as not as a product pusher, but more as someone who can actually advise, an advisor, and then fulfill it with the product need. Jason?
absolutely. And I think, I'm sure everyone at this point is probably tired and sick of it, but really, in the current environment that we're currently living through, the life is unpredictable. And you can see what happens to people who, if we don't have a plan in place for these unexpected events, it leads to a lot of hardship. So again, it's really not always about product, as Vince said. It's really having that sit-down discussion and really talking about their future and how they want to handle everything. So I probably shook a few people in this room, and they're scrambling and hoping to get an answer from good old Jason. So I'm going to provide some answers for you. So what we're talking about here today is really the long-term care and chronic illness riders. Not today, Vince, but if we ask Vince about in his days, if we're talking about companies that actually sells, let's say, a long-term care standalone product, he'll probably tell you it's anywhere between 15 to 20 companies. If you look at it today, there's really not that many. It's maybe a handful. I would say anywhere between 3 to 5 companies who are still in the market, but they're probably not going to be in there for long because it's just not an easy product, not a profitable product to have. So what's so industry changing for us is that they created these products that they allow to put them on our life insurance, which solves a lot of the issues that a standalone long-term care may have. So I'm going to kind of go over really quick in terms of long-term care, chronic illness, what to look out for, so that if you whatever company you represent, be aware of how that rider works. So really, if you're comparing long-term care rider to the chronic illness rider, there's only one difference, and the difference is simply that in most cases, that for chronic illness riders to come into effect, the condition has to be permanent. So if your client is in a situation where the doctor says, well, within 2 to 3 years or whatever, you're going to eventually recover. Again, in most cases, if your policy has a chronic illness rider attached to it, it wouldn't pay for it because it has to be permanent. On the other hand, with LTC long-term care riders, whether it's 2 years, forever, it would always cover it. So again, looking through your product lines, and maybe you have this already, take a look. Do you have the long-term care rider or the chronic illness rider? How do you know what you have? It's very simple. If it's a long-term care rider, it's a long-term care rider. Every other variation in the name, benefit rider, chronic illness, take care of me rider, whatever it may be, those are going to be your chronic illness riders. So that's one of the main differences. In terms of triggers, they trigger both the same way. As long as a client can perform 2 of the 6 of the activity of daily living, or as we know it, the ADLs, which is the eating, bathing, getting dressed, transferring, and continence. If they can't do 2 of the 6, it qualifies for the riders. Or they need substantial supervision due to cognitive impairment, such as Alzheimer's. So those are essentially the triggers which activate these riders. The next variation we want to look at is the rider free or is it a paid rider? And really, the free rider, it is kind of what it is. It is a free rider so that if you attach it to the policy, there is no upfront cost. However, what you have to be aware of is that once the client activates the rider, there is, as a lot of companies call it, an actuarial discount. So basically, they'll go through some various underwritings, they'll reduce the benefit by X amount, and then whatever's left can be used for the LTC or chronic illness. For paid, it's pretty simple. Again, it's a paid rider, so there's a cost upfront, and right on the illustration, it'll tell you exactly how much you'll be getting on a monthly or annual basis. Again, there's a lot of variations, and this is a very hot rider, so you want to know exactly which one are you presenting, or perhaps which one you already have. Next, it's really about how you're getting paid. So that's separated into two categories, which is indemnity or reimbursement. Reimbursement is exactly what it sounds like. You essentially will be collecting the receipts from your medical services. You would then submit set receipts to the insurance carriers. The carriers will review it, look at their guidelines, and if it falls within the guideline, they'll pay, no problem. However, if it does not fall into the guidelines, then they have the right not to pay. So if you're going to a nursing home, you're generally fine. If you're trying to go to a alternative medicine like acupuncture, for example, it's not going to be in the guidelines if you wouldn't reimburse you for something like that. The other one is called indemnity, which is a very fancy word for cash. While I'm a little bit biased, I believe the indemnity is the best rider. It's the best variation because at the end of the day, cash is king. So once the client qualifies, the company will just pay them whatever percentages, typically it's 2% or whatever the annual amount is. They'll pay that to the client. That's it. There's no questions asked. So you can use that to buy medications, to go to hospitals, to build a ramp to your house. If you want to take your family to a cruise, probably right now, but if you want to take your family to a cruise and use the money to pay for it, that's fine. The next one is a joke. Usually because it used to be on compliance, I had prefaces that. The next example is a joke, but if you want to take that money, go to Atlantic City, bet it on black to double your benefit, you can do that too. But again, that is a joke. I would not advise that. It's not a good option, but you do have the freedom to do that if you wish, which is why I believe indemnity is a very, very strong rider. Lastly, it's really just the elimination period or waiting period, depending on the company. And all that really is how long do you have to wait to get your money? So some companies have 0 or very short elimination periods, like 0 to 30 days. The average is about 90 days. And there are some companies out there where they have a 2-year elimination period. So again, why I bring all this up is there's a lot of variations in terms of how this rider works. And there's a lot of pros and cons to each and every single one of them. You just want to be sure which one you have so you know how to access that money. Next are going to be the case studies. I'm going to preface this by saying that there's many ways to utilize this rider. I'm just giving you the most common ones that I've seen. Again, if you have your own personal case you want to review, I can definitely help you design it. But these are just 3 general cases that I see most often. So the first one, case study number 1, is essentially it's a GUL, so it's a guaranteed universal life. And whether it's a 1035 or a dumped in, we're putting that into the product. So you see that I kind of highlighted in that red box. It's on a 51-year-old female. So you'll see it's 100,000. Again, it may be a 1035 from a old VUL or whole life or IUL or current assumption UL, whatever product that has cash value. Or maybe the client had, again, 100,000 sitting in the bank that the sole purpose is maybe either leaving a legacy, meaning to give to the family, or for medical emergencies. So you take said money, you put it into a GUL. So you see on the right hand under death benefit, immediately from day 1, once the policy is from effect, you took the 100,000 the client originally had, now you increase it to a death benefit of 369,502. So really, this is probably the most common scenarios I've seen for this riders, for the simple fact that there's a lot of people out there with old whole life, especially a lot of old VUL products that's probably struggling a bit over the last couple years. that maybe, you know what, I bought this when I was 30, now I'm 51, my needs has changed, it's not doing what I needed to do, what can I do? And GUL is a great example for this. Again, it's to help you to leave a legacy. It provides you subchronic or long-term care benefits. And again, you see the numbers for 100,000 from day one, they can get 369,000. So this is probably the easiest and most common example I've seen. Case study number 2 is a little bit more, not difficult, but so let's say the client says, well, that's great, Jason, but 300,000 is not really what I need. I need more. You know, GUL is a very safe product. It's in the name, guaranteed UL. So once you pay it, you're set. There's nothing to worry about. You have the money for you. However, if the client is a little more risk adverse and wants a possibility of have a higher death benefit, and meaning a higher long-term care or chronic illness benefit, you could put it into something like an IUL. And in this scenario, I've added a no lapse guarantee rider on it. So it becomes a GIUL. So you'll see here, first row, it's the same client, 51-year-old female, same premium, 100,000. On the far right-hand side, you see the death benefit. So now you see that instead of 369, now we're at 522. Now keep in mind that is on a IUL chassis. So while you don't see it on this page, if you look through the whole illustration, the guarantee only really lasts to 85. So how would that happen? If the market tanks for many consecutive years, there's that possibility that the client might lose this policy. Now, it's probably slim, but again, it's all about how risk adverse is your client. So if your client is more of a risk taker and they're fine, the trade-off is great. I think the GIUL is a great option. You'll see on the vertical red box where cash value as well. It also gives the client the ability, if let's say they beat the odds and never need LTC, they always have the chance to take some money out to use it for whatever it may be. So this is also a common example. It gives a client a flexibility, a high death benefit, and access to the cash value. Kind of going back to the first example, you'll see on the right-hand side where it says guaranteed cash rider, which is the very far corner, it's all zeros. So that's why the GUL, while it's a great product, there's no cash, there's not a little flexibility. I just want to make sure I highlight that as well. The last example is, now I'm showing a whole life case. Maybe, you know, some of the arguments I'll have with my brokers is, well, Jason, finding a client with $100,000 cash sitting around is not easy. You know, can this be done on a lower premium side? The answer is absolutely. So this one, let's say we've seen a 46-year-old female, a couple years younger, and you know, we have the discussion and they understand the need of what we're talking about, but they don't have 100,000 on hand. But what they can do is pay 10,000 a year. So in this scenario, we're showing a whole life 10 pay. We're paying $10,000 a year for 10 years. So total will be the 100,000. Again, you'll see from year one that the client has access to death benefit of 306,000 from day number one as well. Again, that's either for legacy or LTC benefits. And since it's a whole life, what I will highlight are the guaranteed values, which is the one I have on the vertical red box. So typically, if it's a whole life scenario, I can say this is a very conservative product. Not only are the premiums guaranteed, not only are the death benefit guaranteed, but there's also a guarantee on the lowest amount of cash value you can actually get. So we look at the very last row, age 70, we can tell with confidence the client that in a worst case scenario, you either have a 306,000 of death benefit or 155,000 of cash value if you beat the odds and maybe you don't need a death benefit or you don't need the long-term care. Again, these are just very generic, most common illustrations I've seen. There's all kinds of ways to design it. It really comes down to what is the goal of the client. And whatever the goal is, you know, we at Strength, we can help you figure it out. So the next slide is just going to be a topic that is a nice idea that Vince created as well. So I'm going to turn it back over to Vince.
Thank you. Thank you, Jason. I wish I created this, but I actually saw this on LinkedIn the other day, and it's a very, very simple close. And so we could complicate our business by having 100 illustrations or going through various different products. But here's the close. And I'm going to use Jason and his wife, Takami, and their daughter, Taylor, as an example. And so I'm going to role play for a second and just say, hey, Jason, and I'm at a sales call seeing Jason and his wife, and say, Jason, if you were to walk out that door one day and never walk back through that door, your wife and Taylor will need me to walk through the same door with a check. The only question I have is, how much does this check need to be made out for? That's a close. So Jason could say $1 million or $2 million. His wife may say $5 million, but it's a pretty good close. And by the way, I didn't use an illustration. All I did is I created a need. And so, especially if you're dealing with young families, is you just say, hey, if the husband walks out or the wife walks out and doesn't come back in the sense of a death, the children and the surviving spouse will need some type of income and a check. So how much do you want me as the producer to walk through the door? What type of check do you want me to walk through? And so it's an easy close. You can make a copy of this. It's a great way to get people's attention, and it gets to the essence of what our product actually does. Jason?
Thank you, Vince. And really, as we're closing off, the next steps are essentially, reaching out to me in terms of contracting. If this is what you sounds like, and for the people who probably saw our video 10 times and you really like our message and you want to work with us, reach out to me. My contact information will be at the very end, and we work on the contracting. In terms of what I help you do, it's really to kind of help you take the clients that you have and figure out the right fit of what we can do for them. So whether it's illustrations, underwriting, case design, and lastly, that really the end game goal is to help you give us the very first app to can really show you what we can do. And again, based on today's environment, depending on how we want to design the case, your case can be approved in as little as 24 hours, but the average is about 5 days. I think a lot of insurance carriers are really into the Accelerate Underwrite program. So if that's something you're interested in and you want to learn more about that, again, that's something that we could definitely talk about. Lastly, I want to promote our next webinar. We're doing this on either a monthly or bi-monthly basis. So I hope you guys can put this on your calendar. The next one will be on August 6th, which is a Thursday. We had a lot of feedback from various people that could not attend today's meeting, and it seems that the morning time will be better. So this time, instead of doing it, let's say at 12 or 2, like our previous webinars, we will be doing it at 9 a.m. And the topic is going to be really focused on foreign nationals. Based on, again, what you saw, this is really our bread and butter. This is the one topic that we as Strength really excel in. So to kind of give you almost like a little bit of a teaser to what that webinar looks like, I'm going to just talk about briefly the foreign nationals. So foreign nationals are really clients who, either don't live in the US or really not even from the US. So what if you had a client who lives overseas most of the time of the year, and let's say they have a property in the US? What if I show you how, with just that alone, having just a property in the US, nothing more, that we can get them a US-based policy? Another scenario would be, let's say you have a client. Maybe they don't have a home here in the US, but they've been living here for 5, 10, 15 years, and well, because of their status, unfortunately, the jobs they can get are relatively limited. And, as some of you may know, that usually means it's some form of cash job. So a lot of the times people are under the impression that if I have a client like this who doesn't have a W-2 or whatever, I can't really sell them a policy. I, in fact, will tell you that's not true. If you have a client just like that, you can absolutely write them a US-based policy with a very strong company as well. It's all about how we work with them. So those are just a really quick teaser of what I'm going to be talking about. I'll really talk more in details of how it works, there's, how to design it and how to talk to the underwriters. Again, whether it's the long-term care or the foreign national, those are really my main strongest and our strongest topics.
Right.
So with that, guys,
Jason, if I could just make a comment, there are 2 or 3 of our former MetLife guys who are general agents, and we are very, very loyal to them. So if you're a part of their organization, you're part of their organization, you'll deal with them and we'll help you with them. If you're not part of their organization, you could deal directly with us. But we are in the general agent business. We're also in the producer business, but we're very, very loyal to our general agents.
Absolutely. And that definitely, well, you did say it, but it goes without saying that if anyone in attendance is already aligned with the GAs that work with us, you will go directly to them. Now you still access to me, but everything will mostly go through them. With that, I will leave you my contact. I thank you very much. Take the time to listen to my webinar. So again, my name is Jason Ho. In case you're on the phone and not in front of the computer, my phone number is 347-635-0340. My email address is jason@strengthib.com. After this, I will be following within 24 to 40 hours. I'm just going through the list. I'll be sending everybody an email just to kind of give you whatever material that I have on hand that kind of talks more in detail about what I just spoke about. Also is to set up a meeting. I would also recommend at the very bottom in my signature, I'm on WeChat. It's a great platform. My QR code is in my signature. So feel free to add me on WeChat. I'm in the midst of creating a multicultural group on WeChat where we'll discuss topics affecting our communities, promoting various webinars or events. So definitely WeChat is another way that's really easy to get in touch with me. So with that said, Chris, if you're on, is there any questions the audience have for me?
There's a few people that are asking for copies of these slides, Jason, so we'll follow up with each of you individually after the webinar today.
Absolutely. So as I said earlier, you will see an email from me. So I will be emailing you guys a presentation. So that's definitely not a problem.
Okay. Thank you, guys. Thank you very much, Jason. Great job. Do appreciate it. Thank you, Chris. And for those attendees, really appreciate you sticking with us and look forward to working with you and developing strength. Thank you.
Take care, everyone. Have a good day.